Good morning. Cryptos are mainly down 50% on the beginning of last week, and the pressure continues. Commodities. The latest tumble began Friday in China following a statement from the State Council on Bitcoin to the effect that they were beginning to crack down on mining and trading to protect the public from inherent risk. Overnight, local exchange Huobi scaled back and has even ceased most trading services, though continues most mining operations. Miners Hashcow and BTC.top have stopped mining. Both oil and gold are beginning the week in an upsurge, gold reaching for the 19K mark, while lumber continues enjoying a demand and lack of supply of a bull market. U.S. drillers are taking advantage of prices, Baker Hughes reporting a 4-rig increase this past week to 356 active drills in operation, providing more backwind, a hitch in denuclearization talks in Tehran. Iran is refusing to allow monitoring of sites again. U.S. markets were again characterized by schism, the Dow up 1/3%, the Nasdaq down 0.5%, the dollar index registered a nice 60-cent jump as data came in Friday morning. Markets manufacturing PMI added a point, coming in at 61.5 for May, while services added nearly 6 points and are at present at 70.1. Existing home sales, on the other hand, contracted by 2.7% to 5.87 million in April. At noon, Chicago's Fed Activity Index will be in, and Lael Brainard will be speechifying at 1. On Friday, her Dallas colleague, Bob Kaplan, said that job hirings are probably down this month, and dollar dealers should lower expectations. Kaplan and others are still seeking ways to decrease the Fed's purchasing activities. Meanwhile, the White House has pared down its infrastructure bill from $2.2 trillion to $1.7. Republicans are still against. Except London and Lisbon, European equities closed the week on a note of optimism, Denmark and Italy registering 10% and 13% increases. Again, we're seeing improved manufacturing PMIs coming in everywhere but Germany, where the marker shed 2 points, and services are all up throughout the continent. In the UK, retail sales increased by a whopping 42.4% year-on-year in April, and Labour is slated to push for a vote on Janet Yellen's downgraded minimum tax bill for corporations throughout the world this week. Finance Minister Rishi Sunak is reportedly pushing for 25% from the current 19%. That's according to Reuters. There's an EU leaders summit opening this morning at 10 GMT, though whether they'll come up with anything newsworthy finance-wise is anybody's guess. And UK's Bank Governor Bailey will be speaking at 2:30. On this weekly chart, we're looking at the FTSE nearing its 3-year high. We need to cross that resistance level that once was support. The hourly chart shows that each day begins with high volumes that dwindle off as we converge towards the 7K level. There's still some leeway for range trading, but there has to be a breakout at some point soon, and the fundamentals speak positively for the UK index. As China clears the way for its digital yuan, South Korea's central bank overnight announced it too was launching a central bank crypto, putting it on par with others like London and Stockholm. Indices are indifferently up across Europe this morning, except New Zealand and Tokyo. Across Asia, of course, where we're down 1/5 and 1/3% respectively. Both countries are showing precisely a 1/10 increase in their currencies. The only supporting data is a 2.5% improvement in Q1 retail sales, following last year's final quarter, which registered a 2.7% contraction. The only data up ahead today is consumer confidence in Korea at 9 p.m. GMT and Singapore's GDP at midnight. The dollar-yen is at the top of a year-long range here, everything else being quite neutral. The RSI, the asset riding its moving average, volumes quite level with maybe a slight tendency to the red. On the hourly chart, we're seeing a pretty consistent 10-day wave here, completing for the second time in a row, which could be technically interesting. In corporate news, Nvidia this morning has announced a 4-for-1 common stock split, subject to stockholder approval. They'll be meeting on June 3rd with the new shares supposed to be trading July 20. John Deere on Friday exceeded Q1 expectations, bringing in revenues of $11 billion and an EPS of 11. Foot Locker is surprised to the upside with $2.15 billion and EPS of $1.96. BNP also did well, BNP Paribas, on the revenues front, but missed on earnings at €1.03 per share. We're still waiting for British American Tobacco and Telstra. Have a great week.